أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله وعلى آله وبارك وسلم. Dear students, Assalamu alaikum wa rahmatullahi wa barakatuh. I welcome you all once again to another session of the video lecture series for Afghanistan economy subject. It's our chapter number 7. In this chapter 7, we are going to discuss lecture number 7, which is about Afghanistan tax compliance. We'll have a discussion on the taxation requirements in Afghanistan, and there will be discussion on how many types of taxes are charged in Afghanistan by the government of Afghanistan, and how those taxes are calculated. And then we'll have discussion on what points we have to consider in order to be a tax compliant entity, or what requires to be tax compliant. And then we'll have discussion on tax planning, and at the end there'll be recommendations in general. So let's begin with a short background of Afghanistan tax compliance. So when an entity wants to carry out business in Afghanistan and tries to play a role in the economic development of Afghanistan, or carry out any economic entity, they are required to get registered within the Ministry of Commerce and Industries, or Ministry of Trade and Commerce. There is a directorate within that. It's called Afghanistan Central Business Registry. So based on the commercial law of Afghanistan, or commercial code of Afghanistan, every entity, whether private or governmental or non-profit organization, they're required to get themselves registered in the Afghanistan Central Business Registry. It is also called ACBR. Not only business entities are required to get themselves registered as per the commercial code, but also as per the bilateral agreements between the government of Afghanistan and the other countries. Means if an international entity, in international organizations, they want to do business in Afghanistan, they're also required to get themselves registered within the country. And if the Afghanistan has any contract with them, bilateral agreement with that country from where this business is coming into Afghanistan, so that agreement will also require this entity to get itself registered in the Central Business Registry of Afghanistan. Registration is also required to continue your operations in Afghanistan, and that include operating specialized permits, opening a bank account, applying for a tax exemption, or remitting withholding taxes from landlord, employees, and vendors. Means if you don't want to do business, but you want to get a specialized permit based on which you will do a certain activity, or you are required to have a permit in order to carry something out, then you are required to get a permit. Before the permit is issued, the permit issuing authorities will require you to get yourselves registered within the Afghanistan Central Business Registry. If you want to open a bank account in Afghanistan, So you will have to get yourself registered within the Afghanistan Central Business Registry. If you want to apply for certain tax exemptions, first thing is that you will have to get yourself registered within the Afghanistan Central Business Registry. Similarly, if you have not done any revenue, means you are not required to pay any taxes, but you are required to withhold taxes from the landlords, from your employees, or from the vendors, which we'll be discussing later on in this lecture. So at the time of remittance, the tax authorities will require you to get yourselves registered within the Afghanistan Central Business Registry. So if you see from many ways, we are to register ourselves within the Afghanistan Central Business Registry. Like, there is no other way but to get yourself registered if you want to operate in Afghanistan in one way or other. So now let's talk about how to be tax compliant in Afghanistan, right? So who is tax compliant? Tax compliant is basically an entity who complies the tax law, means pays all the taxes, files of all its tax returns, and does not violate any tax law. That's called a tax compliant entity. So how we can become a tax compliant entity? By filing our monthly, quarterly, and annual tax returns. So basically, we'll talk about the tax returns later on. Tax returns are basically the tax forms through which we report our taxes on monthly basis, on quarterly basis, and on annual basis. On monthly basis, we usually report our withholding taxes. In other words, we can say we report our expenses, and those expenses could be from rent, from wages, and all the other remaining expenses, right? So usually month is paid to the landlords and wages paid to the employees, and other expenses, when we make other expenses, those payments are made to the vendors. So that's why monthly taxes are divided into three, which is called rental withholding tax, salary withholding tax, and vendor withholding tax. These are reported to the Ministry of Finance or to the tax authority on monthly basis. They are basically our expenses. On quarterly basis, we report our revenue, gross revenue. And then we pay certain percentage of tax specified within the law that we'll discuss later on. And then there is annual tax filing. Annual tax filing is an aggregate filing of all the financial information, including your revenues, your net income, your costs of goods sold, your purchases, and also all the expenses which are allowable as per the income tax law of Afghanistan. We report them annually to the Ministry of Finance along with a balance sheet. We will discuss that later on as well. Okay, like reporting monthly, quarterly, and annually is not sufficient to be a tax compliant. Not only we have to report our taxes or file our tax returns on monthly, quarterly, and annual basis, but also we are required to obtain tax clearance letter, right? Like these activities are chained to one another. When we report monthly, quarterly, and annual tax returns, we'll be able to obtain a tax clearance letter. Why do we require to obtain a tax clearance letter? In order to be able to renew our license. When we have our tax clearance, which is issued from the Ministry of Finance or the tax authorities, that tax clearance letter enables us to renew our license. There is no objection letter for renewing our license. In Afghanistan, usually the licenses are good for 3 years, means the license issuing authority, which is called the Afghanistan Central Business Registry and Intellectual Properties, they issue business licenses for 3 years. So after 3 years, the license expires and we're required to renew. So at the time of renewal, all the business entities, whether individual entities or limited liability corporations or partnerships or joint stock companies or maybe other holding companies or group of companies, they're required to have a tax clearance letter on hand, which is, in other words, we can say it's a no objection letter for renewing the license. Okay, once we are able to renew the license. Why do we renew the license? It's in order to continue operations in Afghanistan, and those operations could be obtaining a work permit, obtaining visas for your employees, doing exports and imports through customs, qualifying for upcoming bids and contracts, and qualify for 2% or maybe 7% withholding rate. Like when you operate in Afghanistan and you provide certain services to the other business organizations, they pay you you invoice them for your services, and then the payments are made to you. So before making payment, they're going to withhold certain percentage of tax as per the law from the invoice amount, and that could be 7% or 2%. 7% is for those individuals who does not have valid license, or they have expired license, or they are not registered. Then they will charge you 7% withholding tax. But if you do have a good license, means an up-to-date license which is not expired, so they'll charge us 2% withholding tax, and from our invoice amounts they will deduct 2%, and the rest of the amounts will be paid to us. And then at the end of the year, while filing the annual tax return, we can credit that already paid amount, tax amount, against our tax liabilities. So that's also required to be a licensed renewed organization. Or if you want to register another business with other name, or we want to start a new operation under the same business, we are required to have a good license, means up-to-date license. So there are 5 stages that enables us to be a tax compliant entity in Afghanistan, right? Now let's go in further and talk about the types of taxes in Afghanistan. There are 6 types of taxes basically charged by the government of Afghanistan from the entities. 4 of them are indirect taxes and 2 of them are direct taxes. When I say indirect tax, it means that it is deducted by the other party from your funds and paid to the Ministry of Finance or to the tax authorities on your behalf. And on annual basis, you can claim or credit those already advanced paid taxes against your actual tax liability at the end of the year. So the first one is rental tax withholding. This is basically as per the Article 59 of the Income Tax Law. Article 59 of the Income Tax Law says that when an entity or an individual has rented out a facility for business purposes, then they are required to withhold a certain percentage of tax from the rent amount before paying that amount to the landlord. So that specific percentage is mentioned within the Article 59. We will discuss it later on. So at the end of the month, while paying the rent, we have to deduct that percentage from the tax rent amount, and deducted amount is paid by the entity to Ministry of Finance alongside reporting a monthly rental withholding tax return, and the net amount is paid to the landlord. Similarly, there is employee tax withholding. It's also an indirect tax, like we withhold tax from our employees and pay to the Ministry of Finance on their behalf. So it's basically their money that we are withholding. It's their tax we withhold as an organization and pay to Ministry of Finance or the tax authority on their behalf. And it's as per the Article 58 of the Income Tax Law. Article 58 of the Income Tax Law comply us to do such a thing. Means at the end of the month, when an entity is going to pay the salary to its employees, they are required to withhold certain percentage. There are certain thresholds for that. We'll discuss them later on. After deducting the tax is paid to the tax authority, and the net amount is paid to the employees. So that's number 2. Number 3 is contractor or vendor tax withholding. This is as per the Article 72 of the Income Tax Law. It says that while paying any amount to other organizations for the services or goods provided by them to us, so when we pay against those services or goods that we have purchased, at the time of payment we have to withhold certain percentage of tax from, withhold here means deduct, from the invoice amount, and then pay the net amount to that vendor or that contractor to whom from whom we received services or goods, and the withheld amount is paid to the tax authorities by filing a monthly vendor withholding tax return, and similarly employee tax withholding tax return. So these 3 are reported on monthly basis. These 3 are basically indirect taxes. They are not our money, they are not our taxes, but we as an organization are required to withhold from the landlord, from the rent amount, from the salaries of the employees, and from the invoice amounts of our vendors or contractors, and paid to the Ministry of Finance, and the net amount is paid to the relevant individuals. Number 4 is dividend or interest or royalties tax withholding. It's as per the Article 46 of the Income Tax Law. It's also a indirect tax, right? So you know what dividend is. When we have shareholders, and at the end of the year we decide that there is a certain net profit, and we announce a certain portion of that net income as a dividend and divide them within the shareholders. While paying the shareholder their part of dividend income, we have to deduct a certain percentage as per the law. Deducted amount is paid to Ministry of Finance by reporting a dividend withholding tax return, and the net amount is paid to the shareholder as the income. Similarly, if we are to pay interest to someone, before paying the interest we have to deduct the tax and remit to the Ministry of Finance. Similarly, when we pay royalties, before paying the royalty we have to deduct tax. So as per the law, there is 20% dividend, interest and royalties withholding tax. Means that before paying these amounts we have to deduct 20% of that gross amount that we are going to pay as a dividend, as an interest or as a royalty. Deduct 20% paid to the tax authority, and the net amount is paid to the other parties, to shareholders, or maybe to the banks, or maybe to a writer, or maybe to a inventor. These 4 are indirect taxes. First 3 they are on monthly basis, and the number 4 is on annual basis usually. And number 5 is business receipt tax. It's a direct tax, means that at the end of the quarter, means that after 3 years of the financial year, each 3 month within the financial year, we have to report our gross revenue, pay our taxes as per the law, and file our quarterly business receipt tax return. So as per the law, there are different percentages for different industries and sectors. We'll discuss them later on. The main thing is that we have to report our gross revenues on a quarterly basis. We have to pay business receipt tax, a certain percentage on gross receipts or gross revenue, and report that by filing a quarterly business receipt tax return. Next is annual income tax return. So this on annual basis, we have to report our revenues and expenses, dividend share, interest expense, royalties expense, and all those expenses are reported to the Ministry of Finance. Not only expenses, but also different revenues, main revenue and revenue from other sources, and the tax calculation is also made within that annual income tax return. And then the tax liability is also shown, taxes paid, and the details are reported to Ministry of Finance. So for each these certain types of 6 discussed here, there is a separate tax return, totally separate tax form having separate format and calculation base. So for each tax we have to fill with the details a separate tax form relevant to rent, relevant to employee, relevant to contractor or vendor, relevant to dividend, interest and royalties, relevant to business receipt tax, and relevant to annual income tax return. Usually the first 5 there is a one pager tax return, but for number 6 annual income tax return, it's basically a 5-page tax return. On first page there is usually the detail of the organization, information about the organization reporting its annual income tax return. On the second page there is tax calculation, means total revenues and total expenses, then net income, taxable income, then tax credits and credit of losses and all that. It's on page number 2. Page number 3 is for revenues. We have to provide the details of revenue, or the main revenue and other revenue from other sources. And page number 4 is basically for the expenses, all the expenses. So these 4 pages are the main pages of the tax return, and these pages are linked with one another. Like we have to first fill page number 4. The total of page number 4 is then transferred to page number 2, and similarly then we have to fill page number 3. The total of page number 3 is transferred to page number 2, and then page number 2 there is tax calculation and all that, and then this information is transferred to page number 1. Page number 5 is for the balance sheet. Usually it's a comparative balance sheet, means the balance sheet of 2 years, the previous year and the current year. So that's all about the annual income tax return. Now let's talk about how to calculate taxes and what is the percentage of each type of tax that we discussed here as per the income tax law. The first one is rental tax withholding or rental withholding tax. As per the law, while paying a monthly rent of 0 to 10,000, there is no tax, like there is 0% tax, and this has to be reported within 15 days after the end of each month. From 10,000 to 100,000 Afghanis, you have to withhold 10% flat from the gross amount and report to Ministry of Finance or the tax authorities within 15 days. If the rent is over 100,000, so there is a flat rate of 15%. We have to withhold 15% and then pay to Ministry of Finance. Suppose we are paying 12,000 Afghani's rent, and then there is 10% 10% tax, so we have to deduct 10% of the 12,000. We have to deduct it from the 12,000 and pay the remaining to the landlord. For example, let me do it in Excel for you. Suppose we have 12,000. That's the rent. So we are required to withhold 10% from 12,000. So that becomes 1,200, right? So basically what we have to do is we have to pay 10,800 to landlord, and this is paid to tax authorities, right? So we have to fill a tax return. Well, we reported an expense of 12,000. Out of 12,000, 1,200 is the tax which is paid to the tax authority, and the net amount, this is the net rent. This is the withholding tax, rental withholding tax, and this is the monthly rent, monthly gross rent, right? So monthly gross rent is 12,000. As per the law, 10% should be deducted, which is 1,200 paid to tax authorities, and net rent remaining of 12,000. Remaining of 12,000 means 12,000 minus 1,200, which is 10,800. It's paid to the landlord. So landlord, at the end of the year, landlord will claim back this 1,200 Afghanis deducted from him each month. So at the end of the year, for example, suppose landlord has paid 14,400. We have deducted 14,400 from the landlord for 1 year, and it is paid to the Minister of Finance. So what landlord will do? Landlord will calculate its own taxes. For example, say 12,000 multiplied by 12 months, 144,000 basically. 144,000 is his rental revenue. That's for the landlord, right? So landlord has earned 144,000 Afghanis for the year from the rent of the house that we have obtained from him. So he is required to pay 20% from this amount, right? Right. So his tax is how much? His tax is 288,000, right? But he has already paid how much? He has already paid withheld from him during the year. So we have already withheld from him 44,000 during the year. So now it's end of the year, he is reporting his own taxes. He will show to tax authorities that he has earned 144,000 Afghanis as rent, and his tax liability is 288,000. But out of this 288,000, he has already paid 144,000, which we have withheld from him and paid to Ministry of Finance, and the records are available. We have filed it through monthly tax returns. So what becomes the current tax liability? It's 14,400, right? That's the total tax liability, and this he has paid already. So the remaining is 14,400. 28,800 is basically his total tax liability. So 14,400 has been withheld. The remaining 14,400 he will pay at the end of the year, right? So that's how it goes with paying taxes in Afghanistan, right? Hope it helps you. Now let's talk about and remember that we have 15 days to report this to Ministry of Finance, pay the withheld tax to Ministry of Finance, and report the details through monthly rental withholding tax return. The next one is employee withholding tax, and as per the Article 58 of the income tax law, there are basically four thresholds for withholding tax from salary and wages, and that is when paying a monthly salary of up to 5,000, there is 0% tax, means there is no tax, right? If your employee charges you 5,000, so you don't have to withhold tax from him because it's 0%. If you are paying more than 5,000 and it's up to 12,500, then you are required to withhold 2% over 5,000. 2% over 5,000 is how much? 7,500. Okay, let's work on it as well. Okay. Suppose one of our employee pays charges us 12,500 Afghani, right? And as per the law, we have to withhold 2% tax, which is over 5,000. Up to 5,000, it's tax free. So first we have to do what? We have to deduct 5,000 from his salary. Now the remaining is 7,500. Now from 7,500, we have to deduct 2%, right? Which is 150. So what we will do now, we'll basically deduct 150 from 12,500, right? This amount will be paid to employee. This amount will be paid to Ministry of Finance, Tax Authority, right? So this is basically, we can say, the gross salary, right? This is our net salary, and this is withholding tax. Withholding, you can say wage, your salary withholding tax, salary withholding tax, or wage withholding tax of 150, right? Okay, now suppose one of our employees charges us 25,000 Afghanis. So how to So how to calculate the wage withholding tax of an employee who charges us 25,000 Afghanis. So if you see, this 25,000 basically covers 3 thresholds. You see, it covers 3 thresholds because one of the portion of this 25,000 is tax-free, 0% tax. One of the portion is 2%, and the remaining portion is subject to 10%. So we have to divide it into 3 portions, right? So let's do that. Let's divide it into 3 portions first. So okay, the first portion is 5,000, and this 5,000 is subject to 0% tax. The other portion is 7,500, and the 7,500 is subject to 2% withholding tax, or 2% withholding tax, right? And the third portion is remaining. Remaining is let's say the remaining amount is 12,500. So let's check if all these 3 sum up to 25,000 or not. Yes, 25,000. So you can see that this 25,000 is basically divided into 3 parts, right? So this remaining 12,500 is subject to 10%. So there is no tax, 0% tax. 7,500 is subject to 2%, so 150. And the remaining 12,500 is subject to 10%, so multiply it by 10%, that is 1,250. So now let's see what is the total tax. The total tax is 1,400, right? 1,400 is the total tax. Now what we will do, we will deduct 1,400 from the salary, right? 1,400 from the salary of this guy, and that it becomes net salary. This net salaries will be paid to the employee, This is basically wage withholding tax to Ministry of Finance, right? So that's how we calculate wage withholding tax of a person who receives 25,000 gross salary per month. But before paying 25,000, we have to deduct the tax, which is 1,400. So we will deduct 1,400 from its $25,000 Afghanis, and the remaining 23,600 is going to be paid to the employee, right? Now let's work on one of the other examples. Suppose one of the employees charges us 125,000 Afghanis. So how to calculate tax for this? So let's first see 125,000 is in which threshold. So if we look at this, the law says that from above 12,500 to 100,000 you have to pay 10%, 2% plus 10%. Means you have to calculate the withholding tax by 3 stages: 0% stage, 2% stage, and 10% stage, as we did for 25,000 previously, like this. Now if the salary crosses the third threshold, which is 100,000, like 1 lakh, it's over 100,000, then we have to calculate it in 4 stages, right? So the new salary that we have recorded here, 125,000, we can calculate it by 4 stages. We have to divide it into 4 thresholds to calculate the correct amount of withholding tax, right? So let me take 4. So the first portion is 5,000 and it is subject to 0% tax. The second portion is 7,500 and this is subject to 2% tax. The third portion is 100,000, right? 100,000 and this is subject to I'll have to eat 100,000. Yes, 100,000, and this is subject to 20%. No, 10%. Yes, 10%. Now above 100,000 is subject to 20%. Now let's see, minus this, this, and this. It's 12,500. So let's cross check. If we sum up all of them, whether it gives us 145,000, 25,000. Yes, it's okay. Our calculation is correct. Now this amount is subject to 20% withholding tax. Now let's calculate. It's 0, so 0 tax. 0 tax here as well. This amount is subject to 2%, so multiplied by 2%, and this amount is subject to 10%, so that is 10,000, and this amount is subject to, and this amount is subject to 20%, so that becomes 2,500, right? 2%. Now what is the total tax? The total tax, let's see what the total tax is. This plus this plus this, this is the total withholding tax of 12,600. 12,600 is our what? It's basically the tax, wage withholding tax paid to Ministry of Finance. The remaining we have to deduct this 12,650 from 135,000 and see what minus. So basically 112,350, this is going to be paid to, this is net salary paid to employee. So that's how it goes, right? From 125,000, a total of 12,650 will be deducted from his salary as wage withholding tax and paid to Ministry of Finance. The remaining 112,350, that's going to be paid to the employee as net salary. So that's how we calculate the wage withholding tax for the employees. Employees having the salaries over 5,000, that's stage number 1. Over 12,500, that's stage number 2. Over 100,000, that's stage number 3. Right? So that's all about the calculation of the wage withholding tax. Hope it helps. You can do practice the way I calculate it in Excel or maybe on a piece of paper. This way you are going to learn how to calculate the rental withholding tax and wage withholding tax. Now let's talk about the third one, and remember that we are required to pay the salary, pay the tax, and report to Ministry of Finance within 10 days of the next month. For example, if you are to report the salary of the month of February, so we have to pay it like at the end of the February. We are required to pay the salary as well as withhold the tax amount and report to Minister of Finance, and we have time till 10th March, like 10 days after the end of February, right? So that's how it is done. Next is contractor withholding tax or vendor withholding tax. As discussed, it's as per the Article 7.2 of the income tax law. So it also has two stages, right? Either you're exempt, like you have 0% tax, right? 0% tax, or you have to pay 50, or you have to pay 7. I said 2 because either 0 or 2, either 0 or 7. Previously I discussed that if we have a valid license, then we'll from our invoices 2% are going to be deducted, or we are going to deduct 2% if our vendors have a valid license which is not expired and good. Then while paying them, we have to deduct 2% if the gross invoice is not more than 500,000 per annum. Means that we have a regular vendor to whom we pay on monthly basis, or maybe we pay him 6 times a year, but total of those transactions, the total payment in a year is equal to 500,000 or more than 500,000. If it is less than 500,000, we are not required to withhold tax. If it is 500,000 or more than 500,000 per year, then we have to deduct 2% in case they have a valid license. But if they do not have valid license, then we have to withhold 7%, right? So this is the job of the finance manager. Finance manager is going to evaluate all the vendors, their first month invoices, and then forecast for the future. For example, we purchase meat from a butcher on regular basis, on daily basis. We purchase meat like for example, we purchase meat every other week, so it becomes like twice a month, and we make payments at the end of the month. And that payment, for example, when we multiply by 12, the total amount is more than 500,000, then finance manager will start withholding 2% tax from the first month or maybe from the second month, right? Including the first month payment as well. If this total 12-month payment to that butcher is not equal to 500,000, then we are not, the finance manager is not required to withhold 2% tax, vendor tax from that butcher, right? That's how it goes. If the butcher does not have a valid license, then 7% should be deducted, because law says that a vendor not having valid license or having expired license should be charged 7% withholding tax. So that's basically an administrative responsibility on our shoulder by the law, that we have to report monthly rental withholding tax, wage withholding tax, for which we have done calculations early on, and vendor withholding tax that we will do calculation right now. So let's take an example here. Suppose we purchase meat every other week, like twice a week, and it's 10 kilos 10 kilos multiplied by 10 kilos multiplied by, okay, let's see, that is 10 kg meat, right? $10 kg meat every other week, so it becomes twice a week. So twice a month. Twice a month is basically 10 kg multiplied by 2, that is 20 kgs. 20 kgs, right? Now, if 1 kg is price is 500 Afghanis, so every month we are going to pay how much? Multiplied by 20, 10,000. That is per month, right? Per month we are going to pay 10,000 to that person supplying meat to our organization. Now, if we calculated it for a year, so 10,000 multiplied by 12, how much is that? That is 120,000. So it's less than 500,000, less than the 500,000. So that's why we are not going to withhold. No withholding, right? No withholding, because the law says if it is less than 500,000, there is no withholding. You see, the law says under 500,000 per year, 0% withholding, no withholding. But it does not mean that we are not going to report. We will report to Ministry of Finance via the tax returns, but no need to withhold taxes. Suppose this is not 10 kg, right? We purchase, for example, say 50 kgs, right? 50 kgs after 2 weeks. In 1 month, 100 kg, and per kg is 500 Afghani. So per month the payment is 50,000 Afghani. So if we divide this by 12 months, so that is 600,000 a year. 600,000 a year. When it is 600,000 a year, now it means that we have to withhold tax, either 2% or 7%. If the person, the entity or the vendor supplying us the meat has the valid license, then we have to charge 2% tax. If does not have a valid license, then we have to charge 7% withholding tax, right? Now, how to charge the tax on monthly basis? Like every month, before paying 500,000, right, we'll deduct 2% of the tax, which is 100,000. So now from this amount, this will be deducted. So this is the total invoice amount, this is the tax, vendor withholding tax, and this is the net invoice. This is going to be, this net invoice 49,000 is going to be paid to the vendor, and 1,000 is paid to Ministry of Finance, and all these details are reported to Ministry of Finance with the help of a tax return, which is called Contractor Withholding Tax return or Vendor Withholding Tax return. Suppose if the vendor does not have a valid license, then what will be done? This 5,000 will be multiplied by 50,000 will be multiplied by 7%, which is 3,500, right? Each month will deduct 3,500 from 50,000 and pay 45,000 to the vendor. This is going to be vendor withholding tax, and this is going to be net invoice, right? So a finance manager has to evaluate, has to decide for each vendor, has to have a finance manager is required to maintain a vendor list and specify or figure out how much they are paid on monthly basis. Then forecast for the future, like for 12 payments or for the period of 1 year, how much is going to be paid in total. If that is within the range, like within the threshold of 500,000, then no tax is charged. If it's above the threshold of 500,000, then either 2% is charged or 7% is charged as contractor or vendor withholding tax. And that's how we can calculate that, right? Okay, that's all for today's session. I'll get back to you with the part 2 of this lecture in the future. So I request all of you to please watch the video lecture, study it, study the supporting materials, do calculations for these 3 types of taxes, and if you have any questions, please come back to me. I'll address all those questions in our part 2 of this lecture or this chapter. Thank you so much for being with me. God bless all of you.